The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start out today, like we usually do, is looking at the German DAX, the FTSE. We'll get these up here, but the first chart I posted today, being a little bit off key here, to start something a little different, I want to show you the importance of the low last night, right after the opening in the mid-afternoon session for the NASDAQ. You notice that 1.618 expansion, folks. Wow, that is really important. We go below that, it is big trouble in River City for these tech stocks. So write that down, because if we go below there, it's very, very nasty. We'll take a look at the DAX here first, and then I've got a little bit of an announcement after we look at these charts. We're going to do a little project here. You notice that we're making a little Gartley here in the DAX on a 60-minute. That would take it up to 13,250, which we probably should make that sometime today. And if we take a look here at the FTSE, it's had a pretty nice rally off of that bottom that we had here on Friday. And it's fact is, we're making a double top up there at the 78% level with that butterfly pattern. So that's acting pretty good. And then if we'll take a look here at the S&P 500, this is what we did yesterday. We made a complete, did exactly what we did between June 1st and June 8th. We did exactly the same thing. You notice that those swings are exactly, that's at 3295, folks. That's what we hit. We rallied over 70 handles, and that's right near the 382 retracement, which we hit in the NASDAQ and the S&P today. So that's very, very important today. Now, if you belong to the 24/7 club, like many of you do, we'll get up here and show you what we did this morning. We put a video out yesterday to cover this around, that's the wrong one. That's Apple. All right. Well, there's the bottom in Apple. You'll see the 382. 121 is also going to be some pretty strong resistance again here in Apple today. We're trading, last time I checked, was 116 and change, but that's that's something that we wanted to remind you of. But the one I really wanted to talk about, which I'll get up here now, Shane Smolian will be our guest, folks, at the break here, so that'll be a lot of fun to listen what he has to say. You'll notice here, this is the euro. We had a double ABCD pattern there over the last 6 trading days, down there at 117.60. The low was 117.55. We suggested that you cover your short there and sell it on a 50 or 60 pip rally, which we got a 65 pip rally this morning. So I would hang on to a short position in that. If it gets above 118.80, I would say we're probably wrong, and we'll book the profit that we've already booked and wait and see what happens next. But right now, it still has a bias to the downside, and all we were doing was booking a profit and then putting it out on a rally. That's what we're supposed to do. Now, give me a second here, because this is really important, boys and girls. We got a chance to do something nice for someone. Let me get this up here. Bill Meridian asked me to introduce you to this young lady. Her name is Haley Garagos. Her phone number is 917-439-5425. She is a filmmaker in New York, and she is doing a documentary on astrology trading. And what she would like for you to do is to call her and to give her it's totally anonymous. I mean, she just wants to know your experience with astro trading. So if you want to do it, it's fine. I think it would be great to help somebody out. And she is a filmmaker. Bill Meridian has alerted us to this. Also, Arch Crawford is helping her. Ray Merriman is helping her, and several other people. But I think because we have such a big audience here, this might be helpful. It doesn't make any difference what you want to say, folks. She would like your ideas and your opinions and stuff like that, totally anonymous. And I spoke with her, and I made sure that her voting, that she put one vote in for a Democrat and one vote in for a Republican. So she's totally neutral there, being from New York. So you don't have to worry about that. But she would like to have your opinion on this. So it's Haley Garagos, 917. I probably misspelled that. 917-439-5425. If you're traveling in your car and you need the phone number, just drop me an email at larrypesavento@gmail.com, and I will send it out. Try to help her if you can, folks. I think it would be, anytime you help somebody, it's good. And she's just starting. Well, evidently she's already does the filmmaking pretty good, but this is her project that she wants to do, and we're going to try to help her out if we can. So that's pretty much it for the main thing here. I wanted to cover a few charts that look pretty good. I still think the euro is headed lower. I think we're making a major top up here today in the stocks, because all we're doing is we're having so far all we've been able to do is make a 38% retracement on this, and it's not a very good bounce, even though it's 70 handles in the S&P. Considering it's dropped so much, this is nothing more than a retracement. So that's what I would be watching. Now, I posted that chart with that Gartley pattern when we were talking about Haley. That's already made $2,000 this morning. Went exactly to the 61% retracement, to the exact tick at 1926, I believe, 1922, and you can see how far we rallied back already in the gold. So that's moving pretty nicely. Okay. I wanted to talk to you just a little bit. We're going to have Shane as our guest here, but we're going to have to start thinking about the possibility of getting short some grains here, boys and girls, and I'm going to be doing that for the 24/7 people. But if you'll look here, this is the soybean meal. Meal is 80% of the bean crop, of course, the oil being 20, and we're right up here at that 61% retracement and backed off. We've got the ABCD pattern in here. It's been a whole month, a little more than a month actually, 6 weeks since we had the start of the rally down there at that triple bottom. That's one that's looking very interesting. Also, if we look at a few of these others, they're also interesting. If you'll look here at the Christmas corn, the December corn, also showing signs of a massive top up there at that 365 level, and that so far has been it. We're trading around 359 early this morning. So those are some of the things we want to be looking at, into the future, because I think those are things that will really be have some pretty good profit potential in them, because we've had good rallies. The crops are being harvested now, and so it'll be fun. So I think we're going to be able to capitalize on that one as we walk through this. But the most important thing today, folks, is that NASDAQ chart, because let me blow it up so you can make sure you can see it really clearly. And I'll repeat the if we get below this level in the NASDAQ, folks, it's lights out, because that number is 10,950. That's a 1.618 expansion in the ABCD. So we get below that, there's big trouble. Just like when we went above it, big trouble on the downside if it goes below it. We'll be right back with Shane Smolian, folks. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Well, I don't think we have Shane on the line. Shane, are you there? Nope. I don't know why he's not there, but we'll continue on. Let's talk about these grains again, folks. I wanted to bring to your attention the wheat market because that's been a really nice one to trade. And, boy, it certainly trades off the lunar cycles, that's for sure. If you'll notice here, we're approaching another ABCD pattern up here at the 78% level up there at 574. Now, that's about 30-some cents from where we are because we backed off 20 cents. Once we went above the high of 555. So my assumption is that probably has completed the pattern, but has missed the 78% level by just a little bit. So we'll see how these things are going to be moving on here. Okay, Shane, my friend, are you there?
Hi, Larry. Can you hear me?
I hear you perfectly. Do you have your charts and everything? There you go. You're in business, my friend. I'm going to turn the mic over to you and tell us what you are taking a look at today, my friend.
Sure. I'd love to. There's a lot going on, but let's start out with the COVID. We have the full rest of the time, right, from 9:20 on?
Yes, sir. You've got the whole thing because I want to hear about the COVID myself, plus the other things that you've got.
I did an extra super duper COVID analysis for everybody because we have extra time. So really, I'm just going to give you a snapshot of the world here. So this is the world, the biweekly cases. So what I'm going to do is I'm actually going to jog over to a website here, and we're going to look at this in real time. So these are the cases. These are the biweekly cases. So in other words, these are the hot spots in the world that you would be looking for COVID. And right now, the United States is doing very well. We're actually down 14%. If you look all over the world, some of these hot spots, I'm just going to highlight them for you so you can see them here, is Jamaica. France is up 99%. Italy is 91%. Hungary, 772%. Czech Republic, up 95%. Latvia, 131. Norway, 58. Congo, 290% up. Somalia, 81%. Sri Lanka, 86. Myanmar, 805%. So I missed Georgia here, 113%. So those are the hot spots. So if you're thinking about COVID and you're wondering about it, that's what's going on in the world right now, where the disease is popping up, and these diseases tend to come back and forth, and they have these waves that come in and out. So it's kind of interesting because even Sweden had a resurgence, which was odd because supposedly they had this herd immunity, but they just had a resurgence. In the United States, North Dakota, South Dakota is so interesting there too. Those are states that didn't really deal with lockdowns too much, and now it's coming back to those states. So I think the theme here is that this can be these outbreaks can be somewhat random, depending upon if someone enters the state or exposure or going back to school or different things like that. And I think that these, right now the kids are at home, but some schools are coming back, and I think that that's going to affect the seasonal patterns too of some commodities, which we'll talk about. I think that right now the oil demand is very low because people are at home still, but people are going to be going back to school soon, and I think that's going to affect the oil demand, which we'll talk about because usually we're in a negative seasonal on oil, but and that's related to COVID. This is the global death count. You can see that we've had these two waves here. The first wave was in April, and this was the main peak. So I had this peaking around April the 11th. The way that I track it by percent positive cases, and this is the United States. So we had this peak in early April. We ran down in June, and then we had a peak again right after the 4th of July. And actually now we're actually looking pretty good. I mean, we're on the way down. Now, of course, there could be another wave that could come in November, but I like the way this looks. I think in general this is a positive trend. Another graph that I like to look at is the excess of death graph. So it looks very much like this. If you see this graph here, this is the number of deaths from all causes, and over here in 2017, 2018, this was the flu. So you can see, just to give you an idea, that's what a flu would do. This was COVID. Most of this was from New York, and then this was our second wave, and we're still above the excessive. We have excessive deaths, but you can see that this graph looks very much like the mortality graph, which is good. So good in the sense that it's declining, not good in the sense that we have excessive deaths. But I think these are all positives, and we have these therapies that are coming out and a possible vaccine, which I'll talk about in another slide. So this is how I measure COVID. I've measured this from the beginning, and this, to me, this is the most important one. This is the number of people that test positive when you're giving them the test. And this is controls for the number of people. So like if you have a lot of people, if you're testing tons and tons and tons of people, you're going to have more positives. So like if you test 0 people, you have 0 positives, right? So the point is that you have to look at this graph and understand that you have to look at the percent of the people that test positive. And we had a peak back around April the 11th. It was 21.5%. That was the peak. And then the low came in June the 16th at 4.5%. And then we had this run up again after the 4th of July, 8.8%. And now keep in mind the number of tests were skyrocketing at this point. So it made all of these cases explode. But the reality is we were less than 50% of the peak at this point, way less. I mean, 21.5 was the peak. And currently we're down to 5.2, which is excellent. We're not down to that 4.5, but we're getting pretty close. So to me, these are all good signs. And these are good signs for the economy and good signs for the market too. So I like the way that this looks. I'll go to one more COVID graph here. This is a biweekly chart that just shows the biweekly change in COVID cases. And you can see we just had that big run up, the percent run up after the 4th of July, right around the 4th of July, and then it kind of fell back down. So I think on balance, things look pretty good right now. I had that coronavirus transit I was tracking, and it made that peak in August, which is right near where we had that peak, and then I have it picking up again in November. So we'll see how that goes with the elections. So any questions about that?
Yeah, I have one.
Sure.
The question about this, on a percentage basis, we've not really lost a lot of people in the world, considering there's 7.3 billion. We've only lost what, a million or 2 or 3 million people.
Yeah.
I mean, it hasn't.
Yeah,
That's
I
not
mean,
much of a pandemic. I mean, that's my 2 cents worth. What do I know?
well, no, that's true. That's a valid point, and the only problem with that is that, you're saying, well, that's with the lockdowns. So it's hard to know what it would have been if we didn't have the lockdowns. So that's the only issue with that. But Sweden is an example of that, where they didn't really have much of a higher case. I mean, they had elderly people that had issues with it, but.
Okay, we're going to pay a few bills here. We'll be right back with Shane Smolian, thewolftrader.com. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Shane Smolian, thewolftrader.com. How about talking about the markets now, my friend?
Let's do it. All right.
Okay,
so
go ahead.
fear and greed index. So I like to start out with this. This is an indicator that measures market sentiment, and I like it because it looks at multiple aspects. It's not just like the VIX or puts calls to puts. It's multiple aspects. It's still in a neutral position right now. It backed off way off. Obviously, we had this 2 or 3 day decline now, and but it's still nowhere near extreme fear or anything like that. It's just kind of in a neutral spot right now. So a week ago, it was at 76, just as a reference, and the peak that it's gone to has been 90 before. So this is an example of the graph. You can see that the peaks before the big decline was up here. This was the COVID decline here, and then it fell all the way down here, rallied up to the high 70s, and now we're down here. So we're just kind of mid-range right now, and it's not really telling us too much, to be honest with you. It's kind of in a neutral spot. It did get high though before that decline that we had. So what I'm going to do today is I'm going to lay out a case, reasons to be positive about the market. I know you have different people on that all have different opinions, but I'm going to lay out my argument here for the reasons to be positive. Okay, so these are a lot of things that I think are very realistic things to look at. I'm looking at the whole picture. Number one, there is going to be a stimulus coming. I know that they're arguing about it, but I think that's coming for the American people probably before the election, and I think that's a positive event for the market. We're in an election cycle. Generally, this year is positive, although the third year is usually the most positive. If it does sink this year, it's usually bad for the party in office, but as a general thing, this is a positive seasonal that we're in. It's almost like a holiday seasonal when you have an election coming. We have improving economic numbers. To me, the most impressive thing about this is there's some states that are still closed down. So you've got all these numbers that are coming in that are always coming in better than expected. The jobs, the unemployment, and states like California and New Jersey are still closed down. So to me, that's a positive sign. The vaccine, I don't think we can underestimate the importance of this psychologically. 2 to 4 months, that may sound like a long ways away, but if they're starting to see that the trials are working, and even if this thing is partially effective, the psychological effect that that's going to have on people to go out and to integrate again, and to people want to get out, people want to get back to work, people want to get on with their lives, even if it's with distancing and masks. I think this is going to be a huge positive for the U.S. and the world. The other one is the weekly Fed juice, which is what I look at. That is so important, and that is near all-time highs. When that happens, typically the market goes up, okay? And then we're also in a period of quantitative easing, so I want to point that out, that before, like, I always measure the Fed juice, okay? But quantitative easing is more of a formalized approach to it, where they're purchasing these bonds and they're implementing these operations. That wasn't the case when we had the COVID decline. And so when you have a full-blown quantitative easing, it's really hard for the market to have a sustained downturn. Now, you might get these fits and bursts like we're seeing now, but for it to get sustained momentum to the downside, it's very difficult. And in fact, it has never happened during a period of QE. Now, at some point, it could change, and that could change, and it could happen. But from what I've seen, based on what I've seen, that's never happened, okay? Over here onto the right side, technology is stable relative to the S&P. Now, I measure this. Now, usually, if you have a market that's ready to go off the cliff, usually the tech is leading the way down. That's not the case here. I'm going to show some charts of that. The next one is the corporate bond market. This is important because the Fed came in with the corporate credit facility. These markets are stable. I don't see any signs there that these markets are cratering. The next one, gold and silver are not rallying. Usually when you have a market that is ready to go off a cliff or panic setting in, people flee to gold and silver. That's not happening. Next one, copper. Copper is strong. Copper is a leading industrial component of the economy. You have the suburban housing boom going on because people are fleeing the cities. That's strong. The treasury bond is relatively stable. It's not skyrocketing. And the dollar has been weak. So those are cases to be positive about the market. So I feel positive about it. I know everybody has their opinion, and we respect those opinions, but that's just my view on this. The things that I look at the Astro and the seasonals. This is the three-headed dragon that I call this, the Astro and the seasonals, the Fed juice, and then I look at the dollar juice. These are the three things that I believe control the markets on the long term. Of course, short term we can have news events and spikes or whatever, but on the long term, I think these are the three things that control it. So that's really this is my focus. My primary focus is the Fed juice, to be honest with you. That's really what I look at, and this is the next graph that I have here. This is the weekly graph of the S&P, and the Fed juice is near all-time highs. and it had flattened out a little bit, but I don't know if Larry, can you see on the graph there? You see how it's starting to hook up again? Can you see where I'm drawing in here on this graph right there? Can anybody see that?
I can see it. Yeah.
Okay, so you're starting to see now they're starting to ramp it back up again. So to me, this is saying that from this perspective, everything looks fine on a weekly time frame. I don't see any really serious damage done in terms of the Fed use. And usually when this Fed use hits a low like this on the weekly time frame, usually it rallies for years, like 2 or 3 years after. So this doesn't happen very often, and that just happens. So I feel optimistic about this long term. Now, short term, yes, there can be fluctuations. We've seen this. I mean, there's no doubt about it. This is a highly volatile market. This is a daily view of the raw Fed use, and you can see that they started pulling back. This was the COVID decline here. This was COVID, and the Fed was ramping and ramping and ramping and ramping. After they got it under control, they did start to pull back into late July, but now they're starting to ramp it back up again. Okay, so I think what you're seeing here is maybe what happened with this in terms of the Fed use is this market kind of caught back up with this Fed use, but they are starting to ramp back up now. So the Fed is looking at a big picture, kind of a rolling kind of a situation over the long term. They just want to prevent these huge, disastrous type of declines like we saw with the COVID. And I will point this out to people that if they were able to stop COVID here, okay, I don't think they're that concerned about this. I mean, they're concerned in the sense that they're going to act on it, but I don't, think about what they were able to turn around here versus what we're seeing right now. So the scale of this is much smaller than what we saw with the COVID. So I feel pretty good. I mean, I have faith in the Fed. I have faith in the Fed use. This is something that I've looked at for years, and from everything that I've seen over the years, this is a very positive phenomenon for the market. So, that's my big perspective right now is the Fed use is still strong, and the Fed is strong, and we're in QE, we're in a quantitative easing period. So this is the S&P right now. So obviously we had that big swoon down for a few days here, but today we're recovering today. We're all the way back up to 33.76. And this is what's interesting to me too. I have my Fed use 3.0 signal here. And I put in an early estimate today. I don't know the exact data yet. I got to wait to collect all that, but I'm kind of trying to estimate it. This thing never went into a sell. I mean, during this whole decline, I mean, and this is incredible. Like I couldn't believe it. I was looking at it yesterday. And...
Yeah. Hey, let's pay a few bills. We'll be
Sure.
right back, Shane. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader. Go ahead, my friend.
Thanks, Larry. So this Fed juice, so the 3.0, this is the one that I optimized, and this thing never went into a sell. And I was looking at it last night when the market opened at 6, and it was still in a buy. And I was like, how is this possible? But apparently it's tracking it because the market's going back up today. It's telling us that the Fed, according to what the Fed is doing, it still wants to go up. So the only problem that you get with this is these big volatility swings, which I'll talk about that in a second. But you can see this Fed just didn't really flinch. It pulled back a little bit, but it's still in a buy. So, I mean, the only thing about this Fed juice is it's tracking the energy of the Fed. So it's not really, these aren't trades in the sense that it's tracking limits and stops. It's just tracking the energy of the Fed. And when this volatility increases, you can get huge swings, and it doesn't even change its signals. So I want to just point something out to people about the change of the volatility. We had a 6-fold increase in volatility in a matter of a few days. And what that means is that it basically makes day-to-day trading almost unrealistic because think about it. If you have whatever, if it goes, your average true range went from 25 up to 150, and 150 means it's going to travel 150 points every day. So, if you're trading with stops and you have certain stop values, you got 3 options. Number 1, you decrease your size by 6 times. So you trade 1/6 of the size, or you have to increase your stop 6 times the size of your stop, or you don't trade at all. It's one of those 3 things because you're dealing with craziness when you're talking about volatility like this. And that's one of the things I wanted to point out. And I'm just going to show you a graphic just to put it side by side, the difference between this. So just in a few days, if you're a surfer and you're out there, you're surfing a 10-foot wave and everything's fine and you think everything's great. And then all of a sudden these 80-foot swells come in and it's not rideable. You can't ride an 80-foot wave. And so to think that you're going to use the same metrics that you used on the 10-foot wave on the 80-foot wave, it just doesn't work. So I just wanted to point that out, that the volatility just did this radical shift, and the S&P has become one of the craziest markets that I follow, to be honest with you, Larry. I mean, I look at even more than gold, the metals, anything like that. This S&P is kind of crazy. I mean, the way that it just goes from calm to just absolutely insane, and then it goes back to calm and then absolutely insane. So it's not an easy market to trade. It's not an easy market to track. Now, one of the other things that I track is the dollar juice. I track the S&P in terms of the dollar. So I have Fed juice and then dollar juice, and this is in a buy. So this also never left the buy. So I was like looking at this. I mean, both of these stayed in a buy the whole time. And so to me, that's a clue that there's still some underlying strength here, because if this dollar juice is going to stay in a buy and the Fed juice is going to stay in a buy, it's telling us that something's not adding up here in terms of the decline. Now, I also look at Astro too, which I'll get to in a second. For those of people who follow the Astro, today is Jupiter, the Sun trining Jupiter, which is a positive aspect. But before I get there, this is the dollar juice here. So you can see the dollar juice zoomed in, and the dollar juice is still looking very strong on the S&P. So I don't have any real changes on that right now. So overall, I still feel pretty good. I mean, I would have, to be honest with you, Larry, I thought that Fed juice would have rolled over, but it just didn't. It didn't want to go down. So so the bounce today, at least today, is showing that. So we'll have to see going forward. Now, the next chart I have here, I know I'm kind of zooming through these charts, but this is, for those who follow the Astro, today we have the Sun trining Jupiter. So this is a very positive event for the S&P 500. This is an efficiency test, so typically it tends to bottom around today. It could have bottomed a little earlier, but the days following this Sun trine Jupiter are generally very positive periods for the market. If you go back through time, even if you go back to 1950 on the S&P, the market likes it after this Sun trine Jupiter. The market likes to go up. And there's also two other events this week. There's the Mars station, which is happening today, and then there's the Jupiter station direct, which is happening Saturday. And I've outlined those efficiency tests on the website for subscribers. So it looks like this, and I did a little video talking about those. But there's a lot of astrological cross currents going on this week. And I think generally bullish, if I had to categorize them for the S&P. So any questions about this so far?
No, that looks pretty good. I have a question. Is this very similar to the Jupiter chart that Bill Meridian posted Friday? Did you see what he did?
For the S&P?
Jupiter. No, it was a Jupiter, but I don't know what an aspect. I mean, I don't know exactly what it was. So
if I remember, I think he's looking at, there's a Jupiter Neptune aspect that is bullish for gold.
That was it. It was Jupiter.
Yeah,
Neptune.
I think that's what he's. Yeah, I think he's referring to that. And so, actually, we'll get to gold now. I have gold still negative. I have the Fed juice going down on gold. The aspect that he's looking at is entirely valid. It is bullish. There's no doubt about it. I look at a few more factors. And so, yes, that Jupiter-Neptune cycle that he's looking at is trying to put up pressure on the metals. There's no doubt about it. But we've also just come into these seasonal highs. And so when you're at a seasonal high and the Fed juice is sinking, it's kind of hard for the metals to go up. So, he may be right. It may go up. We have a seasonal low coming up on the 13th. It might try to go up. But as long as you have a sinking Fed juice on this, it's going to be hard. So what I try to do is I try to take into account the Astro and then also the tape. So the market tape on the Fed juice is sinking. So I'm not going to say it can't go up, but right now it's in a downward profile. So I hopefully that answers your question.
Yeah, it does. It does. I had the wrong thing. So keep going.
Okay. Yeah. So, but he's right. That is a bullish aspect. But I'm looking at, and I think this week with all of these stations, what happens is when planets make stations, there's charts to go around those, and they make kind of like ripples in the pond, if you will. So if you're looking at the pond, these stations tend to make these ripples, and it kind of creates this cross current and this chop in the market. So that's why I looked at all the stations. I mean, this is the Fed juice on gold going down. So that's still negative. That's the dollar. Let me go to this one. This is an important chart here. So look, this is why the Fed created the corporate credit facility. He wanted to stabilize the high yield bond market, which is so critical for corporations to have access to credit. And so this is a very important metric of the market. This market has to be stable for the S&P to be stable. And every time that this indicator on the bottom crosses down, that's stable, because that means the money is moving away from the bonds, the 20-year or 30-year bonds, into the corporate bonds. And so I measure this as a measure of health of the S&P, and it looks okay. So I don't see anything here yet that looks like we're having these major cracks yet in the S&P. Now, I mean, obviously things change, but from what I can see right now, I don't see that. I'm going to go to one more chart here. I know we're probably coming up to a break, but this is the one that I want to show you. This is the technology versus the S&P. And this one is really important, because if you take an Apple, okay, which I have here, versus the S&P, if you have a market that's going down hard, usually that the technology starts leading the way down, okay? And you don't see that here. You see the pullback in the S&P, but Apple pulled back less. So to me, that's another positive sign. I don't, and even Google, which had been underperforming, is trying to cross back up now.
Okay, hey, we'll be right back with Shane Smolian, wolftrader.com, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and a #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're chatting with Shane Smolian. Shane, you want to tell the folks, what you offer and how they can reach you?
Sure. You could, for those of you who are new to the show, I'm Shane Smolian, and I have a newsletter over at wolftraderfutures.com, and you can reach me, Shane, at wolftraderfutures.com. The website is www.wolftraderfutures.com, and you can head over there. There's a free email list. You can sign up for that, and I'll send you out updates or emails, or when I'm going to have appearances, or if there's any new product releases or anything like that. Right now, I have 6 newsletters that we cover. Cover the S&P, metals, energy, currencies, cryptocurrencies, and then I have a Uranian astrology newsletter where we just talk more about the in-depth astrology and the trends and some mundane astrology. I'm trying to look into this election to get an idea about what's going on with that too. It's just of interest right now. But we do have daily updates for all of these. You go to the website and you get a little daily, every day around 2 o'clock, I update the Fed juice and just kind of give you a synopsis. So in addition to that newsletter, you get a daily feedback on that. So we're just working to improve this. And S&P right now, guys, I mean, this is a nutty market from a day-to-day perspective. But long term on the S&P, guys, I really feel positive about this. I mean, I'm going back to this weekly chart here. I feel like usually when these scenarios occur with the Fed juice, when it goes bottom like this, it tends to go for a few years. So,
Shane, may I interrupt you for just a second and make a correction?
Sure.
The S&P has been nutty since April the 16th of 1982 when they first started trading. So that's why they nicknamed it the Stop and P.
Yeah.
So
okay.
That's So I just thought I'd throw that in.
I just mean with the COVID and the Fed juice, I mean, it's just there's so many factors to consider now with it that it's one of the craziest markets that I cover, to be honest with you. I mean, those other markets that you think of as crazy tend to trade a lot smoother than the S&P, but we track it and we do our best to follow it. And I think the Fed juice on the big picture, though, I think it does a pretty good job.
Hey, thanks for joining us today, my friend. We'll have you on again in a few weeks. Shane Smolian, folks, wolftrader.com.